Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
And some of these spreads here, neutral on the dollar with limited risk. And other strategies are going to be neutral on the dollar with loss not limited. You don't need to trade those strategies when you're new. You should paper trade any of these strategies to get comfortable with them. And so this slide here is just a demonstration of profit limit and loss limited, moderately bullish, moderately bearish, very bullish, very bearish. Good idea to look at this when you're planning your trades and actually pick out the strategies that'll fit better for you. Vertical spreads, horizontal spreads, diagonal spreads, debit spreads, and credit spreads. Spreads, again, reducing risk. It's what you want to achieve when you become a more advanced option trader, the ability to trade any of these spreads. Here's our Australian dollar pair. So this is the dollar versus the Aussie. And again, if you're level 1, this is your worst nightmare because this currency from 329.10 until 5.410 went and nowhere. So the dollar is basically, despite the fact that the Royal Bank of Australia is raising interest rates on pretty much on a regular basis, the dollar is basing near the bottom of this area, but I'm losing time. And if I'm long, I'm losing a lot of time, and that's a problem. And that's always going to be a problem for somebody that's buying, strictly buying calls. It's not a bad strategy for somebody that's neutral on the dollar and wants to collect premium, selling put spreads below, because you still have a little bit more support near the lows of this currency at this time. But as usual, something happens all the time. We had the European crises. Now we have people panicking. We've got people buying in their short positions on the dollar. And basically all this was a short covering rally that went pretty high and in a hurry. So at that point in time, if I start to see sideways movement and I'm long calls, forget it. I mean, that's the worst thing that you can have happen is a market that all of a sudden starts going sideways and you're long and you're losing your time. So while you still have some time left in the options, you can buy. And I also want to point out at the bottom there, after the rally, I marked in an area called support. And I marked it there because the origin of that rally, that's where the institutional order flow to buy is. Anybody that wanted to buy at that 110 price did not get a chance to buy because somebody was willing to pay 110.50 and then 111 and 113 and et cetera. So if there's resting limit orders at the origin of that big rally, this is going to give somebody an opportunity later on to buy some kind of a pullback to support. If you do happen to hang on to some of your calls and you don't lose too much time, you also want to watch this resistance area just above 125. Because if we rally up into that resistance area, that's where a lot of your time will come out and a lot of your volatility too. So a couple of weeks later, we do rally a little bit higher. And then by the middle of the month, all of a sudden, the dollar starts to sell off again. Okay, at that point, I'm definitely seeing price resistance. I've already lost 4 weeks of time, depending on how much time I have. If I haven't bailed on my position, I've also lost quite a bit of volatility. So at that point, take your gains, especially if you break that first nearby moving average. If you don't break the moving average and you want to reestablish the position, if you close above if you go between the two moving averages, which is a 10 period and a 30, you can always reestablish your long position. Okay? And I mentioned that another opportunity to buy calls or sell out of the money put spreads is when price does revisit an area of support. The puts are going to be elevated due to the volatility of the selling. You're probably going to get decent premium if you wait. And if you do, use a stop loss below the area of the zone to protect your capital and take your profits on any kind of a sharp rally from that area This is a second opportunity to buy some kind of a pullback. We have this opportunity in the Mexican peso last year when I did this webinar. And from here, the Mexican peso actually rallied up to 135 in a 2-week period. So it visited the support and pretty much had a nice bounce back. And we also visited that area of support on 8/15, and we had a sharp rally at that point in time. So if this is the case, if you happen to be long calls on buying the calls on the pullback, if you have volatility, or if you've sold your put spreads below there and you want to buy them back, do so when the volatility decreases and when prices once again start to drop. And with this latest market, just a few of those bounces is all that's happened. So we bounced from about 110 to about 115. That's not a bad little intraday trade for somebody that wants to be a, well, let's call it not an intraday trade, but an intermediate term trend trader. The primary trend is down. However, we have the opportunity for a bounce. We take the bounce, and when we fail at our moving averages, that's when the downtrend resumes. And now we have retraced, and we've actually gone beyond 100% of the move from the 2008 rally that went from 101 all the way up to 165. So it's a trending situation. We'll talk about that next. Okay, here's your potential pullback to support trade coming up here in the Mexican peso, so dollar Mexican peso. I've identified the area of the sharp rally from last year. The rally happened actually from this year. That happened on 6/19. So I've marked off the area I want to be a buyer, and I was actually going to put the numbers in there. I'd be a buyer at 123 with a stop below 121. And my first target's going to be, since I'm risking $2, my first target's going to be 128 or 129. Yeah, 129. So I wrote the numbers down on I was intending to put them on this next slide, but unfortunately didn't get a chance to before I sent the presentation. So this could be a potential bounce trade, and that's all it could be. The Mexican peso and the dollar can make a new low against the peso if the selling continues. But when we get to our dollar forecast, I'll give you a reason why this looks like a pretty decent opportunity, at least for some kind of a decent bounce.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.